today's episode, we are looking at an Mmfs compared to Saccos. In our previous episode, we looked at the similarities between a money market fund and Saccos. This one, I'm giving you the differences. Take note of reason number 7 and number 8. That is where the real deal is. A disclaimer, for this comparison, I reserve myself to tier 1 Saccos because Saccos will have 3 levels. We have tier 1 Saccos, we have tier 2 Saccos, and we have the pure Bossa Saccos. You need know the reason why your friend said he joined a Sacco and when he went to withdraw, the money was not forthcoming. That member may be joined a Sacco without knowing the type that he joined. Quick facts. Number 1, accessibility. The ease of access. How easy can I access the Sacco? How easy can I access my account? How easy? It's a question of platforms. Is it brick and mortar only? Or we have brick and mortar and online platform, mobile applications, USSDs, pay bills, and the like. Money market funds are a little bit more advanced, even in terms of how they come into existence. More so, majority or all money market funds do have mobile applications and other online platforms through which a member can access and interact with their account sitting with the fund manager. You are able to see your balances, you are able to query, but for most Saccos are tier 1. All our Saccos will have platforms through which you can access a statement and others, but they are not as functional as the money market fund because this is a new development in Saccos. Saccos are keeping in pace with that one. Number 2, flexibility. A money market fund, the least I've seen, can allow you to invest an amount to as low as 100 shillings. They do not give a limit as to what a specific amount that you must put into that investment. For Saccos, though they don't indicate the least you can put in and the frequency, at least Saccos give you a minimum amount of deposits that you must put into your account every other month. And the least I've seen is around 1,500, others as high as 5,000, 10,000. But in terms of that level of flexibility, many market funds take the day. You can put in 100 shillings and forget about it. A Sacco, many Saccos have 100 shillings. You will have to do a frequency, a multiplication of that amount in different days to build up to the required minimum for a period. Then there's liquidity. And liquidity is the ease with which or how quick can the Sacco or the fund manager convert the investment back to money and pay us, the investors. So with this case of liquidity, by nature, money market funds in law and their nature, they are created to invest in high quality investments that are easily convertible back to cash. And that's why they are short-term investment. And that's why we talk of near cash investments. While on the other side, for Saccos, by principle or by law, Saccos are a bit long-term. And the nature of investment is into member loans, where majority of those loans are long-term loans. And therefore, because of that legal agreement, the legal requirement that this is a loan, they are not easily convertible back into cash if you were to liquidate. And therefore, that's the reason why the Sacco bylaws provide for liquidation process, which may take quite some time, and therefore for the liquidity aspects, a member or an investor can access their money in a money market fund easily and within a short time. Affordability, a question of cost. The joining fees, the management fees and the like, and for question of joining fees, for money market funds, joining fees are zero. There are no joining fees. For majority of Saccos, for you to join that Sacco, you will be required to pay a fee, a joining fee. In terms of management fees and the like, Saccos do not charge that, but money market funds, all money market funds charge a management fee, which is a percentage of the return that you get from your investment. We have OPM, using other people's money, or what in other terms we call debt capital or loans. Money market funds do not offer credit facilities or do not offer loans to the investors, but your investment in the money market fund can be used as security or as security for a loan in other financial institutions underlying. Saccos, that is their primary business. That is their primary business, to offer loans to their members on security of their savings and other forms of securities. And also the money market fund underlying can be used as security for a Sacco loan. So for that reason, OPM is only available under Saccos. Returns and taxes. Return is what you get out of your investment. For money market funds, the return is interest. And that interest, the rate will vary from one money market fund to the other, but on average, yesterday I checking, it was at 15%, and the relevant tax for that is 15% that is withheld by the fund manager as an agent of the tax agency. On the side of Saccos, we have a number of returns. You get a dividend on your investment in share capital, which is taxed at a withholding rate of 5%. Then you will get interest on all deposit accounts that you operate, and mainly the deposits, and that interest, just like the money market fund, will be withheld tax at the rate of 15%. Then you can also work on a capital gain on trading or purchase of Sacco shares from withdrawing members, and that because it's not netted, it's not yet in the bracket, and that because it depends on a man-to-man agreement, then that is a gain that you may make that will not be taxed. And note, the capital gain will not be in cash. It will be in book value. The other one, number 7, is compounding, convenience, and frequency. And this is primarily the key reason why a money market fund beats all these other forms of investment flat. Comparing, and that's the one is compounding. And the compounding is descriptive to mean that the interest or the return that you are getting from that investment also gets to work for you, or the return, the interest generates another interest. Why? Because when that interest is computed and paid, it is paid into your investment account. That account, the investment account that you opened and put your initial investment, and the ones that you are putting your build-ups or additions, the fund manager will pay your interest into that account, meaning that the interest will form part of your investment amount or principal in the next investment. That one is not found in Saccos. And they get this one clear. A Sacco will compute your interest at the end of the year. And what will the Sacco do? The interest you have earned will be paid to your FOSA account, which is different from your investment account. That is the share capital account or the deposit account. And therefore, for that reason, the interest does not form part of your investment. Number two, the Sacco has predatory habit for business. Most Saccos immediately they declare a dividend even before the AGM approves it. They form a loan product to eat or generate a revenue from your dividend. And those loan products, they call them dividend advance loans, which in most cases, they charge you a 10%. Remember, from the period, the year end, and the date or the required date for your AGM should not exceed 4 months. The year ended in December, you must have an AGM that declares and pays out the dividend before end of April. So for a short 4 months, you get to pay 10% as interest on that dividend that you have already earned, but just waiting for a ratification for payout. That will not be there when it comes to a money market fund. 3, convenience. And this is the ease or your required effort to make interest form part of principal. A money market fund, as we have indicated, will pay or deposit your interest into your investment account, accumulating the amount for investment. A Sacco has paid it to another account, meaning that you are the one as a member, an investor, who is supposed now to take that interest and route it back to your deposit account or your share capital account in order for it to continue generating income. Remember, the deposits that are, the interest that are, or the dividend that has been paid in this separate account, you can also take it from there and put it in any other form of investment, so long as interest is going to be put into work to generate more money, interest that is compounding. So it means I can take the interest and put it in a money market fund. I can take the interest and put it in a high yield deposit account or high yield savings account. So long as it is interest that has been reinvested to generate more interest that is compounding. But where is the convenience? A money market fund will not require you to reinvest the interest. The money market fund automatically reinvests your interest, as opposed to a Sacco where you, the investor, the member, is supposed to act on that interest and reinvest it. Otherwise, the interest will remain idle. No money should ever be left idle. Then for frequency, we are still on number 7, frequency. Frequency is the number of times interest is computed on your investments. And that is a key element again that determines the outcome. The reason why the money market fund investment oversees or supersedes, becomes better than the high yield deposit in the Sacco is on frequency. A money market fund computes your interest on a daily basis. It is daily interest that is compounded or reinvested on a daily basis, meaning that a money market fund can give you a frequency of more than 360 times. A Sacco computes only once at the end of the financial period, giving you a frequency of 1. And therefore, A money market beats a Sacco. That's a key element. Then number 8 is on security and protection of the capital or the amount of money that you put in, time, and risk. And this calls for regulation and the structures that are put in place to ensure safety of our money. That is, our money does not get lost, and that our money does not lose its value or its purchasing power. And in this case, for a money market fund, in terms of security and control, there are 4 independent parties involved. And these independent parties, none sits with the other. One, we have the fund manager, who is responsible for mobilization of the money and the investing. But the fund itself, or the money, the basket where the money is, resides with another party who is independent from the fund manager or the investment firm, and that is a custodian, which is a bank. Then there is a third person called a trustee, who is charged with the responsibility in law to make sure the interest of the investor in the money market fund is at all time taken care of. Remember, the custodian who is sitting with the money has to ensure that the money is invested as per the money market fact sheet or tear sheet. Every money market fund must specifically tell or give information to the investor on where the money shall be invested. So the custodian ensures that the fund manager specifically puts the money in the specified investments, which in law must be at least 4, because the law does not allow the fund manager to put more than 25% of that fund into one investment, so that at least we can have a spread of the risk, so that in the event that investment was to collapse, the fund is not badly affected. Only 25% will be at stake. The fourth one, we have the CMA, that is the regulator himself. And the regulator oversees the general function of the money market fund. Look at a Sacco. When it comes to a Sacco, yes, we will have the board, which is composed of 2 units. That's the CMC, the Central Management Committee, the Supervisory Committee. We have but those 2 bodies sit in one room. We shall have the AGM that is composed by the members. The same members who form our investment avenue, because all our deposits are invested in loans to our members. It is the same members who appointed the board, both the supervisory. So in terms of spread of risk, you cannot compare a Sacco and a money market fund. Suppose the worst was to happen. If a money market fund, if the investment firm, the fund manager and his firm were to collapse, they don't collapse with the money, because the money sits with the custodian. And therefore, what would happen? The Capital Markets Authority will appoint another fund manager to continue with the investment. But if a Sacco was to collapse, a Sacco will disappear with everything. And what automatically comes into force is a liquidation process that might take forever in order to liquidate all the assets, including the main asset, which is the loan book and the loan portfolios there, which might take some good time. And for that reason, those 2, our point number 7 on compounding, convenience and frequency, and number 8 on security and protection, those are the primary reasons why a money market fund is far much better than a Sacco. Don't forget the other factors. The fact that you can easily access your money because liquidation or conversion of the investment back to cash is easier in money market fund as compared to a Sacco. Don't forget about the access, they join their fees and what have you. But number 9, we have ownership. Saccos in law, every member is required to buy a part of the share capital of the Sacco in order to become an owner, because by principle, Saccos are co-owned by the members and democratically controlled. So the share capital that gives ownership in a Sacco is kinda not the member choice, but a forced purchase, which does not happen in a money market fund. And the last one is arbitrage, where arbitraging is identifying a low-cost market where you can purchase and invest in a high-return market. In this case, an arbitrage, a Sacco will offer an opportunity or a platform for arbitrage because their loans are affordable. The cost of that capital compared to other sources of capital is more affordable, and because other platforms give a better return. If you can easily, one can easily access capital from a Sacco and they invest in a money market fund. We have seen Saccos that are charging 12% in their loans, effective rate, and we have money market funds that are paying as high as 16%. So comparing 12 and 16, there are 400 basis points that can be considered for purposes of arbitraging between a Sacco and us. So arbitraging will be available in a Sacco as opposed to a money market fund. But in conclusion, a money market fund beats a Sacco for purposes of emergency fund investments. For purposes of long-term investment, borrowing suits a Sacco. And the next one is an understanding of our Sacco share capital.